Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, October 17th, another positive start to the week. This time, soybeans leading the advance higher. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, beans up 15, closing at 977 3/4. Corn up fractionally, and wheat in Chicago giving in 2 cents to the upside. News today, let's start first of all with Saudi Arabia. They were in the market for wheat over the weekend, buying 600,000 metric tons of wheat. Most of that is optional origin, and some of it will likely come from the U.S. Other news out, the U.S. Department of Agriculture's crop progress report will be out later today. Traders look for a 49% pace of harvest for the corn crop and 62% completed for beans. So look for those later today. Other news, during the trade session, we had NOPA crush numbers that were out. They came in positive for September, coming in at 129.4 million bushels crushed for the month of September versus expectations of 127.7. Also supporting the bean market was a really strong export inspection number, coming in at 2.5 million metric tons inspected for exports this past week, versus expectations that range from 1.3 to 1.6 million metric tons. Wheat and corn coming in at the low end of expectations, or in the case of corn, below expectations. Corn having a disappointing week with only 875,000 metric tons inspected for exports versus expectations that were above 1 million, and wheat coming in right at the low end at 450,000. Let's take a look at the export progress, or the export performance so far year to date. This is export inspection, so this is basically a measure of physical exports that are leaving the country. Last Friday we looked at export commitments, or the amount that's been forward booked. Both of those numbers, export commitments as well as export actual physical movements, have been very robust this year. Corn coming in at 80% above last year. USDA, remember, is only factoring in a 17% mark. So even though we have slow or weaker than expected numbers this week, we're still doing much better than last year. Soybeans a little less positive in export inspections versus sales. Sales, remember, are running about 30% ahead of last year. Inspections are only 14% ahead of last year, but they're still above the 5% mark that is pegged higher by USDA. And wheat coming in just above the USDA expectation of a 26% increase, with export inspections ahead 29% over last year. Let's take a look at the action in the bean market. Beans were up overnight and were supported in large part by the big move in palm oil. Palm oil is up nearly 7% in the last two trade sessions, and especially strong on Sunday night. So that got the bean market really moving higher today. What was interesting about today's trade action is when we did get into the morning trade session at the opening bell at 8:30, we saw a pretty big pulse higher to the 979 mark, but quickly eroded and actually looked like we were going to move quite a bit lower. But instead, we found some support after about an hour of trading, and continued to grind higher, and actually closed at the high of the day around that 979 mark. So that was certainly encouraging if you're bullish in this market, because it seems like the buyers are willing to step in on any sort of price dips in this market. As we look at sort of the long-term chart here, the daily chart from the GrainEdge trading platform, we can see that we've cleared sort of some upside resistance here in that 970 to 979 mark. And probably the next key resistance will be in that 990 mark. That will be sort of the testing ground as we move forward. But right now, this is really sort of being driven by the demand side of the market, as well as sort of a short covering rally. So keep that in mind as you're doing your trading. As always, if you'd like to learn more about how we at GrainHedge can help you in your own grain trading situation, give us a look online, grainhedge.com, and take a free demo of our trading platform.
As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by technical alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.